Hey, welcome everybody to the 40 Finance channel. Just doing a live stream here on Friday, and as the title says, is a stock sale on tap. And I don't know, I feel like a lot of the broad-based indicators are suggesting that we might have some opportunity in stocks either that we've been watching or stocks that maybe you already own, but you wanted to add to, but maybe you didn't want to add to your positions at all-time highs. I certainly don't like to do anything during all-time highs. That's just not my particular style. So I'm just going to show you just some of the things that I was looking at here this morning. Take a quick look at the market. Obviously, look at your guys' stocks and offer my 2 cents on what I see with them. Daniel, how you doing? Small caps way down is Daniel's comment, and they are way down. And that is definitely one of the areas that I think is sort of intriguing here. And we're setting up for earnings next week. And to me, I'll just show you a couple things that caught my attention today that I think maybe we're at a crossroads, and you cannot predict a crash. You can predict with a little more accuracy money flowing out of the market. But I'm not even here to say that that's for sure. But I'll just show you what I'm seeing and some of the reasons that maybe be ready in case there is a stock sale. So thanks guys for coming in on the chat. I will answer questions like I always do, but let me just go through a little bit of what's going on in the news. And this is big, broad news, right? So CNN, this is funny right here. Breaking: Biden administration reverses Trump-era showerhead rule. I think this has something to do with the amount of gallons that the White House showerheads display. I don't know how that's breaking news, but whatever. So a couple things that we saw here just today on the COVID case, which obviously has been, let me see if I can get rid of this video. There is a rise in COVID cases. I don't think that's super surprising, but we do have the Delta variant that some people are focusing on as a potential issue. Now, this live stream isn't about COVID, but what I will say here is that I noticed, and I'm not sure that it's on this page, but LA, Los Angeles, just reinstated a mask mandate in public areas. So to me, that's a little bit of a blow psychologically to one of the biggest cities in America. And I think that it's, like I said, I don't anticipate that we'll go back to a world that we saw last year. But if we start to get back into this mask thing and questioning vaccines and whatever, that would certainly be a blow to the general psychology of the stock market. Also, something to keep your eye on is the increase in tensions between U.S., China, and throw Taiwan in there as the place that's sort of at the boiling point. I just read this article. It's a deceptive headline because they say dozens of F-22 fighter jets. All this really is preparation for exercises that happen all the time out in the ocean. The only reason it's newsworthy, however, is because of the number of planes that ended up going out there. So if we were to have any escalated tensions with China, in my opinion, that would be bad. Obviously, not only for the health of the world, but the stock market would go into a place where there's a lot of uncertainty. And when there's uncertainty, generally speaking, you do see prices go down. Now let's look at stocks more specifically. 1 second here. And today, S&P 0.32% down, Dow about the same. NASDAQ 0.36, not huge moves. Ironically, the Russell 2000 is taking a little bit of a bounce, plus 0.15. But to Daniel's point, some of the smaller caps that I own have just been in a free fall, to be honest with you. And I will show you that. I forgot that I didn't switch my screen over, sorry. So Paysafe, this is a stock that I encourage you to look at. I think that it is reaching a buy point for the long term. At 1052, I think my price is much closer to 14. And this is similar to like a Visa, well, Visa maybe, but think of it more, maybe a little more closer to PayPal, a small PayPal, and they operate in gambling markets so that people can make payments to websites and such, digital wallets, all that stuff. Magnite is another one. This is a advertising technology firm that is behind connected TV. This is another stock that I own. You may want to start taking a look at Magnite. Keep it on your watch list anyhow, because its prices went down. And the thing with Magnite, if you follow the advertising industry, this holds true for Trading Desk and some of the others. Google's reinstatement, essentially, of cookie technology, at least for 2 more years, was really quite a win for companies like this. And yet the stock, I think this one reached 35 not too long ago. Let's see if I can pull it up. Year to date. So this is a stock back in the February highs. It was in the 60s. That price was way too high in my opinion. But if we take, a reasonable guess would say there's certainly $35 to $40 available in this stock. And more importantly, if you follow it like I do, the EPS estimate trend is on the way up over the past 90 days. So you see 90 days ago, the current year was 26 cents. You're now up to 58 cents. And 2022 went from 45 cents to 83 cents. So this one is trending in the right direction. You have plenty of growth prospects here, 80% revenue growth for this year and projected at 30% right now. So it is good. And here's some of the related ones that would let me squeeze this in. Related stocks that would likely also do well in this environment. Pubmatic, Fubu, not pictured is Trading Desk. We've talked about apps before. It's not really a part of this connected TV advertising world. However, that is a stock just to highlight that has been brought up by other viewers, really on a downtrend. And I think there could be some opportunities for this one. Definitely research and check it out. I'm really attracted to stocks that have shown the potential to ride high and are maybe on tough times right now, and that's certainly what's going on with Digital Turbine. All right, so, one last thing I wanted to show you guys is next week, earnings calendar. Not my next week, your next week. 1 second. So here we go, that's today, Monday the 19th, we start to get into some real earnings, IBM, Steel, Tractor Supply, who else is on here? Couple banks, nothing huge. Getting into Tuesday, though, we do start to see some names that we all know. Netflix, Chipotle, United Airlines, Intuitive Surgical, Ally Financial. These are just ones that I recognize. Let's see, anything small cap down here that's worth watching? Nothing really on my radar. I think we hit the big dogs. Then on Wednesday, you've got Verizon, J&J, Coca-Cola, Las Vegas Sands, Discover, Harley-Davidson, NASDAQ. I think those are most of the big ones on there. Thursday could be an interesting day because you get some social media, Twitter and Snap coming in. Also, Intel, that is rumored to be acquiring a foundry company. I just saw on CNBC, so there could be some interesting details in here. You also have some airlines, AT&T. So some good stuff on Thursday, Domino's Pizza, where we can get a view of how the consumer is processing through this whole world. And let's see if anything big on Fridays. Fridays are sometimes lame because everything's before the bell. But no, I mean, you got American Express, Next Era, Schlumberger, Next Era again. Anyhow, so some notable names, probably most notably Netflix in there, as well as American Express, airlines. A lot of people banking on the airlines. They saw a huge run up. Those have kind of trickled down a little bit. And so it'll be interesting to see those who place bets on the airlines. You know, what is the update there? How are revenues going? We can safely assume that ticket sales are up significantly, but don't forget that up significantly from last year doesn't mean on par from 2018 or whatever year you want to pick. And then furthermore, forget about par for a second. We normally try to invest in stocks that are growing their business. So at what point does Alaskan Airlines start to comp and beat 2019? That is one reason that I'm not invested in airlines, because I think that world's a little bit away. But, you know, we'll see what they say next week. All right, taking a look at some questions here. Mohammed wanted to ask, is it time to sell NVIDIA? Bought at 560. I do think that NVIDIA, which I love the company, I do think it's had a rather extraordinary run. Should you take your $200 here, knowing that potentially if you live in America, you're going to pay some of that gain in tax? I would consider it, to be honest with you. This is one, you know, you made an easy almost $200 on NVIDIA. If you bought at 560, I'm guessing you bought right here in May 19th. You know, that's a nice run. I don't think, in my opinion, that NVIDIA goes anywhere much farther past $800 on any given day. I mean, I think the $800 was out of line, just to be 100% fair. But it's a good company. But, you know, I would think about it if I were you. Now, in my world, if I made, let's just say, $200 on a stock like that, I would immediately have to turn around at the end of the tax year, and I would have to pay approximately 25% of that cost or that gain right back to the government. So I'd have a lot of thinking to do if I wanted to do that, because as a long-term investor, I think no one's going to question NVIDIA over the long term. It just really depends on your financial situation if you need that money. What I would do if I bought NVIDIA at 560 for the long term, I would be happy that I'm plus $200, and I would not add at all, certainly wouldn't add in the 745 range, but I would wait. There will be a day, a market down day, where NVIDIA could either go back to 560 or perhaps even below that mark, and that's where I would add more. So that's how I would tackle it. Long term, I'd keep NVIDIA, so that I agree with watching. That's how I would play it, because I don't want to give the money away. But, you know, when I say long term with NVIDIA, I'm talking about 3 to 5 years here. So I don't think too many people would argue that, but you will likely see some downtrend from this price at some point this year. It just ran up. I mean, $800. You know, it just doesn't make a lot of sense from a valuation perspective. Dylan started SoFi position, talked about SoFi quite a bit. Also did PaySafe at 1048. I think, my position on PaySafe as an owner of the stock is I really like this price at 1048. I don't think that it's a miraculous stock that 10x's in the next 12 months, but I think that it's a sound investment with gambling growing. And I think if you got it in that $10 range and you don't mind holding for a year or two, you're going to get some good return out of that. Really hard to screw up. Really hard to screw up fintech, right? In payment processing, and particularly in a growing industry like gambling, and that's what I like about PaySafe. On the SoFi side, get a lot of SoFi questions. I think that they're a little expensive right now, but as I've said numerous times on SoFi, if you're in it for the long, I mean, we're down to 1546. If you're playing the long game on SoFi, I don't blame you because there's some attraction there. I just think, like, from a moat competition perspective, there's nothing really special that they're doing, but that doesn't mean they can't do it well. And at $15, throw 3 to 5 years on this one, and I think you probably come out ahead. All right, do you foresee market crashing? This is Ismail. GDP to S&P ratios all time. I do. I don't, crash. The technical term for a crash is, much higher. That would be like in that minus 20% range. I don't know if we will see that, but I like the odds of prices going down from where they are today, particularly across high valuation stocks. Not necessarily the meme stocks, because that doesn't really follow fundamental logic, but just stuff that's run up, stuff that's 30x sales, 25x sales. I mean, that's a hell of a multiple, and it's good if you got in early, right? So let's just pretend on SoFi, it's at 15 today. Let's just pretend that you were able to buy SoFi at $5. I think you just hold at that point. You're up 10, but the real win for this company is down the road. I don't know that I sell my SoFi and get into the taxes on it. I think I just hold, and if something weird happens where the prices go down, maybe I add more. But I do like the concept of stocks like SoFi. Their prospects for going down, I think, are higher than their prospects for another plus 20%, is what I would say. Now, Lion's here, and how you doing? He doesn't see a crash until the tail end of the year. Fed has been very stagnant, maybe a specific sector, but the market as a whole, he doesn't think so. And I can't argue that. In my camp, like I said, I don't really think a crash is imminent. I do believe, though, that the high growth stocks are pushing their limits. And I think that eventually some of the easier wins are gone, right? So from a mental perspective, retail traders anyway, came in last year. You could have thrown a dart at a board and been up 50%. And some of that just constant run up is definitely gone from the market, at least right now. And you can just pick any stock and look at a year-to-date chart, particularly in a growth name, and you'll see the roller coaster ride. So that day of just straight up period, I do think is probably ending. And so with that, it doesn't mean that the net gain won't be positive for the year, but playing the roller coaster is where you can actually make the best money for a long term, because you can get stuff while it's on sale. All right, finally catch you live stream from China. Good to see you, Mr. A. Eric Lee, do you think the current market conditions will drag down tech stocks with good earnings? So good earnings as a fundamental type of investor, good earnings supports your stock price. Now, the only question is, which way will these CEOs come out and say the future holds, right? So they all got off the hook last year. Every single one of those guys and gals got off the hook because they could say, COVID economy, can't project it, we have no earnings guidance for next quarter. Those days are over. The street expects some sort of guidance. We'll see a little bit of that game with Netflix because, with Netflix, which by the way, I'm a fan, Netflix, people want these subscriber numbers. And if they don't hit them, they get sour on Netflix. I see a little bit different game for Netflix in terms of, maybe more, what's the word I'm looking for here? Maybe, more value per customer, right? Getting more money per customer as opposed to infinitely growing customers. But nonetheless, my point there is that the CEO, Reed Hastings, is expected by the street to come out and say, look, here's what we did this year. Here's the growth. Next quarter, we expect ... And whatever is in those words for next quarter, we expect plus 500,000 subscribers, right? We expect EPS of plus blah, 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 blah. That's where you get this game because the analysts make up their own projections. Then you get a consensus across multiple people. Then Reed Hastings shares his actual. And if it's different, arguably if it's down from what they project, then you've got yourself a stock that's a little bit in purgatory and doesn't necessarily go up until the next one. So, Daniel, again, how you feel about SoFi? I think we talked about it. That's probably a question that came in while I was talking. Thinking about Shopify, which I haven't looked at a while. This would be a high growth name, obviously, in my opinion. I think there was an opportunity to get Shopify around $1,000 not terribly long ago. So year to date, May growth stock crash, you're at 1047. Their earnings July 28th, so you got about 12 days till earnings, and there's absolutely no question that Shopify is printing, absolutely just printing money. And you see that here. These are probably non-GAAP numbers, how these are growing last year, this year, and this is going to be a company whose EPS doesn't grow at a crazy rate because they're always going to have to reinvest in acquisition. But you still have plus 50 and plus 32% revenue growth projected through 2022. This is where I've said before, we're going to start talking a lot more about the projections for 2022, right? Analysts, we're about to get through Q2 of this year, so your forward PEs are going to start being calculated probably no later than September, October. They're going to be calculated on growth companies based on 2022 expectations. So as an investor for stocks that you're looking at, I encourage you to almost throw 2021 away in the sense that make sure your companies are going to do good things in 2021, right? Shopify will do good things. They will plus 50% revenue. What are they doing in 2022? That's where prices are going to start stabilizing around. And, let's be fair, it's all a guess, but we do have 38 analysts here. And the average is plus 33%. Now, if it was me with Shopify, I would probably get a little greedy on this price or average down. If you've been waiting on it for a while, your high this year was 1538, it looks like, highest close anyway. You're down 100 from there. I get greedier. because there's not a ton on these metrics. Let's take a look. Maybe I'm wrong. Historical metrics. So you're at 384 forward PE. 2019 was in the 400s. End of 2020 was 300. I think you could still see some lower prices. What's our price to sales? And see, this is the big one. 52x. Gee whiz, 30, 15 certainly sounds a lot better. My 2 cents would be to be patient. Or if you just gotta buy it because you've always wanted it, buy one share. $14.39. Prepare to save some money and come in and average down if the opportunity lends itself. That's my 2 cents anyhow. NVIDIA's doing a stock split. That's interesting. You know that stock splits don't necessarily rise or increase the value of a stock. However, in retail world, they can make the stock more attractive to folks on a budget. So yeah, probably the stock split, to be honest with you, lends itself back to the concept of holding long. So the original question was from Mohammed, do I take my $200 a per share and, whatever, cash it out? I would say for me, like the stock split is yet another reason why I would just keep it and know that NVIDIA is going to do bigger, better things, certainly over a medium time range of 3 to 5 years. I mean, I can't see it. I can't see them not doing well. Airbnb fair value, $100 maybe. It sounds about right. I've stared at it before. I like the disruption here. I couldn't quite push myself over the edge to buy it down. I thought it had hit 120s. This is year to date, but now looks like 130s. One thing's for sure, it ain't 216 fair value wise. Let's see. This is Morningstar. They're putting June 15th, so this is a month old. They're putting fair value at 84. Let's see what they say about moat. Narrow moat company. Two-sided, here we go. Airbnb developed a two-sided marketplace that is able to monetize, thereby driving a narrow economic moat for the company. And I could see that. Every user that they add to their marketplace certainly gives them some moat-like advantage. I am a little concerned about Airbnb's the legal attacks on the company for the people that have the parties. You also do not have to dig very far to see some home owners. So the folks that supply the houses to their marketplace, many have been disappointed with not only the customer service, but also with the way that Airbnb has kind of delisted them, stuff like that. And then on the flip side, you've got customers that have had a bad experience due to things such as using photos that didn't really represent the property. That's tough. So that's tough. I think that Airbnb continues to grow, but it's not a perfect situation. And it would be interesting to listen to their investor call to see like, hey, what are the struggles? Every new company has struggles. It's not a big deal. But what are you doing to fix it? I need a little bit more security in that marketplace, and perhaps maybe I'll say a little bit more professionalism in operating it before I could get super excited. Otherwise, I would be much more likely, all debt aside, to take Expedia for just slightly more just because I think that they have a broader basket of opportunities, including VRBO. Chestad, I think further down to go, totally agree. Could be more like Death from a Thousand Cuts, where it just drags down over time, just holding and buying small stuff. So I'm right there with Chestad in the sense that, it doesn't have to be minus 20% in a day, right? You can look and get these minus 0.32s, minus 0.2 every day or 4 out of the 5 days a week for multiple weeks, and you're still going to get a net opportunity on small stuff. I'm not buying right now. If I did, looking at my list, I would consider PaySafe and Magnite, maybe. And I would consider, so Sabre, I've talked about 100 times. That one is getting close to my cost basis of 11. I don't think it's an immediate turnaround, but I think Sabre definitely goes up from 11. And then from there, I'm looking for a much bigger discount on higher growth names that I recently did the video on, which was like C Limited, Melly, Zillow, just to name a couple, CrowdStrike. There's stuff like that I would jump in if we had a rocky day and I feel like I saw something. All right, sorry, I was just looking at the numbers for the day. Lion, what happened to TSM? If I remember, so I hold TSM. It's not going anywhere. And if I remember correctly, TSM's revenue, it was either revenue or sales came in slightly below guidance, and so they got dinged. Now, as I let off the show, what is also interesting now is we've got Air Force jets flying out to the Pacific, concerns about what will China do with Taiwan. That is bad news if you're a Taiwan semiconductor investor like I am, but I'm not selling it. I'm not going to freak about that. I think that TSM has done a good job of at least starting the conversation of moving facilities internationally to different places, Europe, United States, but there could be some rocky roads for TSM. On the bright side, always keep in mind with TSM is that it is a dividend stock, and so it'll give you a couple bucks over the long term. Very unlikely, though, that stock would go, say, from $100 to $200. It would take a lot of news to push it in that way. Teladoc, I don't. Let's see. Let's talk about Teladoc from a fundamental standpoint. I've looked at it before. I don't think it has the moat that some people think it does. That's my opinion. I still think I would probably buy Zoom and hope that Zoom makes their own version of Teladoc, to be honest with you. However, you have had a nice rundown in price. It looks like 132 on the May meltdown was your low. From the statistical side, 13x sales, which is all we can do on this one, is not terrible compared to where it has been, particularly if you want to call it a tech stock. They could be profitable in 2022, plus 30% growth revenue in 2022. I don't know. If I saw Teladoc's one that I think could be a slow burn gainer, and 140 isn't necessarily the worst price in the world, but it is in a high multiple category, in my opinion. So it goes along with everything else that I think that you could have some opportunity to get in lower. I tend to think that a lot, but one way to solve it is to, if you've been following it, you know a ton about the stock, you've been reading all the news, you know about how many insurance networks are they comprised of, what is the outlook post-COVID. If you can answer those questions, which I cannot, then you can buy it at 147 if you're excited, and perhaps just buy, 25% of whatever you think you're going to buy and pick off some if we do get a downturn. What are the odds that Teladoc goes back to $300 like it was in February? I would argue slim to zero chance over the next 90 days. Apps, Eric Lee brought up apps. Apps seems to be widely undervalued by most analysts' standpoints. I looked at it. I can't figure out why it went down. I was supposed to do some homework on that, and I never did. There's something here. It's just I need to know why people just bailed on it. I mean, it is a bail. You got about a 60-45-ish forward PE. If we look ahead to next year, that drops to 30 for a tech company. Obviously, this is weird how you would have plus 255% sales this year and then go back to plus 30, which plus 30 isn't bad. It's just rather pedestrian compared to what you did the year before. The EPS trend, though, strong. 90 days ago, 93 cents. And it's been updated to 150. 90 days ago, you were at $1.18 for next year, and that's now over $2. On the tip rank side, let's see if we got any updates. Squeeze it in. 10 days ago, you've got two buys, both over triple digits. There's a lot of strong signs for apps, the ticker APPS. Now, if it did hit $100, I think to hit $100, it's going back to unreasonable tech valuation multiples. So I think maybe $100 over the next 18 months would be at a healthy pace fundamentally for the stock, right? It's very unlikely that they're going to wake up tomorrow and make $1 billion off their services. This is a crawl. The sales contracts have to be signed, the accounting, the checks have to come in, right? But there's something here. Dig in to what I haven't dug into, and that is, where did the support go? Why did people flock out of this one? I think that's a question that you'd have to ask before you invested in it, because it doesn't show obviously on the screens I was looking at, so there has to be a reason why. And you need to know that before you buy it, hoping that it goes from $60 to $100. Thank you so much, Mohammed. Thank you. Great stock. Vortex, apps, future revenues, $2 billion and profitable. So there's another supporter for apps. Kevin, good afternoon. Good to see you. What do you think about home builders? Very interesting sector that I have no exposure to. I play in homes. You guys, I did the video that I really do want to get into Zillow, somewhere under $100. I think that'll eventually happen. But with homes, I've never done builders. I've got Rocket Mortgage. I'd love to get Zillow. Those would be the two ways that I would play homes. However, I mean, everything in at least new home headlines suggests that the environment for home builders couldn't be any better. I mean, the insatiable demand, arguably not enough resources to build enough homes. I'm not familiar with GRBK, but let's take a look at it. I'm not familiar mostly because I'm not in this industry. Funny enough, this is Green Brick Partners. You know, I just did that stock sector look, and homes and mortgages, you could definitely see that those were, from a projection standpoint, they were one of the more undervalued sectors. Let me read the blurb on these guys. So this is Plano, Texas. Let me scoot this over for you guys. Home building, land development company, 3 segments, builder operations, central, southeast, and land development, land acquisition, design, construction, title, mortgage services. So I definitely like the fact that they have a lot of irons in the fire. It owns or controls approximately 14,500 home sites in Dallas, Fort Worth, Atlanta, Treasure Coast, Florida. Company sells its homes through sales reps and independent real estate. Okay, so it does sound like they have a lot of different angles to this. Interestingly enough, despite COVID, you've got what I would argue is the exact financial bar chart that you want to see, right? Revenue increasing and earnings increasing as well. So you look at some companies and the green goes up, the blue goes down, and that's when, you know, bar charts you can't get the whole story. But I see some of them where the blue goes down and the green's going up, and I'm like, I wonder if you have a company or if you just have a sales operation. Only 4 analysts right now in this one, so take it with a grain of salt, but you're looking to add about $1 to EPS this year, another 45 cents or so next year. Sales, strong double digits, so plus 50% this year, plus 20% next year. I would figure, and this is what I'm figuring for Rocket Mortgage as well, that the analyst estimates for mortgages and home sales next year, they're under my expectation. Let's take a look at the trend. $3 90 days ago, you added whatever 10% there, and then next year's climbing as well. So there's definitely something to this. It doesn't look like a terrible buy. Annual price to sales at 109. It's hard for me to know the price to sales average for this industry. It looks like in 18 and 19, you know, depending on market conditions, there was a little bit cheaper, but you're already cheaper than last year. Forward PEs aren't projected here in Yahoo, but the trailing PE is certainly a multi-year low. So there could be something. Income statement, balance sheet, $28 million in the bank, debt of $240 million, but revenue of $997, and I have no doubt that in home building you have to carry, I wouldn't even say that is like a ridiculous amount of debt considering you're bringing in almost $1 billion, but if you think about the operations for something like that, you have to buy this land, and it could take years to develop. So no surprise that they would carry a little more debt than the average person or average company. So why not? With a home building company, you know what you're banking on, right? You're saying outside of standard fundamental values, which I think that this one, GRBK, ticked every box. You're saying I am bullish on home building exceeding expectations, right? Analysts and economists think it's going to be X. They probably are super worried about interest rates. You're buying it because you think most of those worries are unfounded. I tend to agree that a lot of worries about real estate and mortgages are unfounded. I have no doubt that mortgage rates are going to increase, right? We're still in this world, though, where you're talking about historical lows for mortgage rates. And you know what happens when mortgage rates go up is house prices tend to go down. So the cost, if you think everybody's freaking because they got a 4% mortgage, not true. Because on the marketing side, they're going to see the house that they looked at 6 months ago is now down $50,000, $75,000. So they're going to be enticed and they're going to see that trade-off. And the funny thing is, most of them could pay more in the long run, just with the interest rate, but the regular retail folks are not going to think of it that way. All right, keep AMD, yes sir, no questions asked. It looks like the price went down again today. You're starting to get back in a game with AMD. I thought it shot up and was going to be gone, but you are starting to see, I can adjust this. So AMD down here at 75, I thought was like really attractive. Anything under 80, I think for long term, you have to like it. Then it shot up to 95, and I thought it would be gone. I really did. But now you're down to 86. Some of us are projecting some market softness. Maybe you can get it under 80 again. I don't see any reason to sell it, though. I really don't. They have, if you compare them to Intel, which I don't mind Intel, but their opportunity to pull market share is still years in front of them. They have years and years and years of growth coming at them, assuming they continue to execute and take it at the pace that they're taking market share now. So yeah, I don't see any reason to sell AMD, my 2 cents. All right, guys, I think I got through all the questions. Hopefully everybody is looking forward to the weekend. Have a great weekend. Thanks for joining today, and we'll catch you on the next video. Take it easy.